Good morning, traders, and welcome to the opening trade. I'm Ayla. Good morning, traders, and welcome to the opening trade. I'm Ayla. Good morning, traders, and welcome to the opening trade. I'm Ayla. Good morning, traders, and welcome to the opening trade. I'm Ayla. Good morning, traders, and welcome to the opening trade. I'm here. Good morning, traders, and welcome to the opening trade. I'm here. 3-step manual trade. Into the $5 manual trade before I got on here. $5 manual trade before I got on here. $5 manual first thing I like to do before I got on here. $5 manual right in before I got on here. $5 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 right in before I got on here. Yesterday after we left crude oil, yesterday after we left annual crude stuff, indicator we left crude oil still on the indicator we left crude oil still on the indicator still on the indicator we have a great video we have a great video all right, we have a great video. Let's take a look. All right, we have a great video. All right, we have a great video. So normally it's 0. All right, we have a great so normally it's 0. All right, we have a great so normally it's 0. All right, we have a great so normally which of right so normally which of right so normally which of right so which of right so which of right Alright, so let's take a look at the back test. Alright, so let's take a look at the back test. Alright, so let's take a look at the first one would be on the Dow would be on the Dow would be 3 years on the Dow would be 3 years on our back test is our max drawdown 3 years on our back test is our max drawdown 3 years on our back test is our max automated trading on our back test is our max automated trading on our back test is our max automated trading on our back test is our max automated 2 minutes after that on the Russell market open 2 minutes after that on the Russell market open so we'll fire off after that on the Russell market open so we'll fire off after that on the Russell market open so we'll fire off after that on the Russell market open so we'll fire off after that on the Russell market open so we'll fire off after that Russell we can time fire off after that Russell we can time fire off after that Russell we can time so let's take a look at we can time so let's take a look at so let's take a look So again, here's looking at crude oil. So again, here's looking at crude oil. So yesterday, here's looking at crude oil. So yesterday, and green crude oil. So yellow and
After we
green
got off
or red.
screaming,
So
you
yes,
could have
yellow and
after
green
we got off
or red.
screaming,
So
you
yes,
could have
yellow and
after
green
we got off
or red.
screaming,
So
you
yes,
could have
yellow and
after we
green
got off
or and then it
screaming,
starts
you
all the
could
way
have
up to
after we
three
got off
or and then it
screaming,
starts
you
all the
could
way
have
up to
after we got off
seven, and then
the
it
two
starts
and
all the way
three
up
are
to
also
seven,
low. When it
seven,
all
and
the
then it
two
starts
and
all the
three
way
are
up to
also low.
seven,
When it
seven,
all
and
the
then it
two
starts
and
all the
three
way
are
up to
also low. When it
seven,
all
and
the
a
two
half,
and
seven
three
and a
are
half,
also low. When it all
and
the
a
two
half,
and
12
three
and a
are
half
also
units,
low. When it all
vitamin
the
C
two
oil,
and
12
three
and a
are
half
also
units,
low. When it
vitamin
all
C
the two
oil,
and
12
three
and a
are
half
also
units,
low. When it
vitamin
all
C
the two
oil,
and
12 and
three
a
are
half
also
units,
low. When it
vitamin
all
C
the two
oil,
and
12
three
and a
are
half
also
units,
low. When it
vitamin
all
C
the two and
oil, 12
three
and a
are
half
also
units,
low. All the
vitamin
way
C
through
oil, 12 and a half units,
all the
vitamin
way
C
through
oil, 12 and a half units,
all the
vitamin
way
C.
through
Now let's see the Russell. Look at the
all the
Russell
way
T.
through
So tell me the Russell. Look at the
all the
Russell
way
T.
through
So tell me the Russell. Look at the
all the
Russell
way
T.
through
So tell me the Russell. Look at the
all the
Russell
way
T. So
through
tell me the Russell. Look at the Russell T. So tell me the Russell. Look at the Russell T. So tell me the Russell. Look at the Russell T. Good morning, and on today's and on today's good morning, and on today's good morning, and on today's third 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 and on today's one more chart here. We have 3 minutes before the CCD market opens. So 3 minutes roughly to start a business trade. We have 3 minutes roughly to start a business trade. Starting over here, starting over here, starting over here, starting over starting over here. All right, so what do we? All right, what do we know? What do we? Friday. All right, we know Friday. All right, we know that Friday. All right, we know month over month Friday. All right, we know month over month Friday. All right, lower than 14 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 Friday. Know that the retail sales month over month came out lower than forecasted. Import price 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 came out lower than forecasted. So at 8:45, all right, so at 8:45, remember Waller, it was at 9, 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 remember Waller, it was already at 9, remember Waller, it was already at 9, already being utilized that's being utilized as reduction that's being out and utilized like that's being out and utilized as reduction that's being out and utilized as reduction that's being out and utilized as reduction good morning, good morning, side of the IMF good morning, side of the IMF tomorrow. Good morning, side of the IMF tomorrow. Okay, for the side of the IMF in New York market today, here in New York market today, oil here in New York market today, oil here in New York market today, oil All right. Okay. All right. Crude oil's making its pull up and above the 200 period EMA. There with our first. Okay, let's see what else is happening in the other markets then. So here is the Russell. Here is here's the Dow, the Nasdaq, and the S&P. So our first automated trade, as long as the trade indicators are met, will be on the Dow. So crude oil is making its pull up and above. Let's take a look at what is happening in the news. U.S. manufacturing output falls more than forecasted. Toronto Stock Exchange rose at the open in a currency brand to acquire KE2 Therm. Not sure if I'm saying this word correctly. If you're looking at crude oil, that candle is a monster. Look at it run. So obviously we want to let that candle do all of the movement it's going to do before we try to take a manual trade in crude oil to maybe catch it on its way back to the 200 period EMA, like we showed earlier what happened after we left. Here we go. Evergent launches a captive product suite for subscriber churn management. Lat AM political economic calendar week is ahead. The U.S. capacity utilization is at a 4-month high. So the first candle after the New York market has closed, and we see it is a green candle. Our other 4 charts are set up for automated trades at specific times, so we don't want to bungle that up. So we want to leave them alone and let them do their thing at their time slots and see what happens. So for crude oil, that's the one we look at for manual trading in the morning. And we see that it has made a giant pull up above the 200 period EMA. Yes, the candle looks red now, but that's an open candle, so we don't know its true candle color until the candle is closed. To figure out when a candle closes, you put your crosshairs on the candle. If you could stop shaking, there you go. And then you see down at the oh goodness, you see down at the bottom, it tells you in the little square that I have less than 2 minutes before this candle will close, and it's going to close at 6:36. At 6:36, the candle will change to its true color. But we know if we're above the 200 period EMA, we need a red candle, a red step 2, and a red step 3. Since the step 2 and step 3 are not there, we're not too concerned about what color the candle is going to turn at this time. It will be interesting to see if the ones below step 2 and 3 change as well. Okay, so we have less than a minute before we could potentially see an automated trade fire up on the Dow Jones futures. We would like to thank you for watching, liking, and subscribing. We greatly appreciate it. More systems are automated and they are live when enabled by the user. They run in the U.S. equity futures markets. Free trials to the automated trading systems are on our website at theopeningtrade.com. We also now have indicator-driven discretionary or manual trading systems on our website, as well as some videos on our YouTube channel that go over that as well if you were curious about the three-step colors indicator that I'm always talking about here. Okay, so we did not see an automated trade fire off on the on the on the Dow. The Dow didn't fire. That just means that the automated trade indicators were not met for it. Were not met, and that's totally fine. The great thing about our free trials is that they're 100% trials is that they're 100% user friendly, and if you want to fine tune it so you can get closer to your expectations of what you're hoping to see in your outcome, uh, the choices are endless. It is totally user friendly, and I just love that feature. Fed funds features traders see 82% chance of a quarter point rate hike in May after comments by Waller. The 2-year Treasury jumps to 4.08%. The U.S. retail sales post second straight monthly drop. Maybe everyone is doing better at reusing, reducing, and recycling, or they're just watching their wallets. I like to choose the first one and then the second one. You know, let's reduce, reuse, and recycle. Okay, so apparently the Russell did not meet the trade indicators either. I have everything set up, so that just means that the automated trade indicator was not met at this time. Crude oil is still making its pull up above and away from the 200 period EMA, and we see here on step 2 the trend strength is still green. When we're above the white dashed 200 period EMA line, we would like to see red candles, red lines in step 2 and 3, so that way we can go into an into a manual trade. While we're watching for our automated trades, we have less than 2 minutes before we could potentially see some automated trades fire off. At this time, 2 did not fire off because their trade indicators weren't met, which is not surprising, as we see that they are still pulling above and away from the 200 period EMA. It is looking like it's trying to repeat this over here. We'll see what happens. I mean, if you're looking here at the Russell, it looks like, oh, is this a copying right there? Oh, I hit the wrong button on the Dow, so let me get that. All right, so NASDAQ has less than a minute before the automated trades potentially could fire off. If they do, awesome. If they don't, that's fine. We'll be here Monday to see how the markets fare for us. All right, so Stifel reinstates Campbell
Order
Soup at
submitted.
hold with a $55 price target. All right, so NASDAQ jumps into an automated trade, which means the automated trade indicator was met clearly because I wasn't even on that screen or looking at that screen. So that's why we got the sound to tell us. And the S&P 500 as well fired off into an automated trade. So we'll be watching these two automated trades here. So at this time, I like to just keep toggling back and forth between the two automated trades, keeping my eye on them. The best thing you can do in trading is make choices that you are comfortable with. So you need to make sure that you're okay with, the consequences of clicking the button. Make sure you understand what you're doing. Make sure that you read and understand all associated risks listed on our website and in this video description. I'm not going to do that. Okay. All right, so here is the NASDAQ, still in an automated trade, and here is the S&P 500. We're trying to catch these on their way back to the 200 period EMA. That's what I was talking about. So what's happening over here? Dow and Russell, the indicators are not there yet. Crude oil, the indication is not there yet for a manual trade. So we're just going to watch our two automated trades. We'll be toggling between the two. Canada home sales jump of 1.4% in March. Needham lowers price target on Petco Health and Wellness to $15 from $20 and maintains the buy rating. Oh, NASDAQ flipped on us. I guess it's not done making it pull away. But maybe it's just trying to test out, you know, that level. All right. Bullion Gold Resources agrees to sell Turgeon Lake property to Excite Resources, and it is up 11.1%. UBS upgrades Brampton to buy from neutral. Industrial output up 0.4% in March, and it is boosted by utilities. Zantic expands executive team with Dr. Ryan Vega, sets sights on orchestrating the future of healthcare. We were talking about Wells Fargo earlier this week. They went ahead and cut 4% of their jobs, just like they were talking about. All right, Raymond James adjusts the price target on CSX from to $34 from $36 and maintains its outperform rating. Voya Financial plans to redeem junior subordinate notes due 2053. Catalent is down over 28% and is on track for record percent decrease. Oh, let's take a look at our automated trades. Oh, that looks ugly. Well, hopefully it turns around. All right, the first indicator has come out on crude oil to be paying more attention. It's down here for the supply and demand has finally turned red. So we still need to see a red step 2 and a red step 3. A red step 1 in order to do a manual trade. Russell is very close to the 200 period EMA. Well, the candle is painted very close. The step 2 and 3 is finally turned red, the candle turned red, but step 2 switched to a green. So when above, you need 3 in a row to go down. So there is no automated trade, no manual trades available. We keep on switching those two words. There's no trade to take manually at this time. Make sure that you do what is comfortable for you. Here's our automated trade on the S&P 500 and the NASDAQ. So I'm going to disable the S&P 500, and I'm going to grab my stop bar, and I'm going to bring it down to right here. What's the open? Where'd it go? I'm trying to get it to 41.85.
Order filled.
Oh, that means NASDAQ got stopped out in a loss, unfortunately. We are going to be taking a look here at the S&P 500. Make sure anybody said anything in chat. All right. It's 14 minutes before the prelim UOM consumer sentiment report comes out. So we do know that that is on its way. More news on its way. You gotta love data. It's the only way to come up with your strategies, right? Okay. The Fed is expected to hike despite March's retail sales drop. National retail properties maintain a quarterly dividend at 55 cents a share, payable May 15th to shareholders as of April 28th. Barclays adjusted its price target on Walt Disney to $107 from $110, and maintains the equal weight rating. Hopefully we don't get stopped out, but if we do, we do, and that's just the way the cookie crumbled today. We will definitely be back here on Monday to see what kind of automated trades we could do. All right, so we got stopped out in a loss. We'll take a look at the crude oil. See, there is no manual trade available, nor is there a manual trade on the Russell or the Dow or the NASDAQ or the S&P 500. And, that's just how it goes sometimes. We know that people are waiting to see what that prelim UOM consumer sentiment report is going to say. All right, so we thank you for watching, liking, subscribing. We greatly appreciate it. Don't forget to check out our free trials to the automated trading systems on our website at theopeningtrade.com. We also have indicator-driven discretionary or manual trading systems on there as well. All right, you guys have a lovely weekend. We'll see you next week, and we'll see you then.